Good evening, everyone. Good evening. Big warm welcome. As usual, thank you very much. Recognize all of the names. So thank you very much for joining me. And more are coming in. So as you know, if you're a regular, we've got a couple of minutes here where we just have to run through the basics. So for those of you who are new, welcome. Tonight's topic is commodities weather report. Is it time to grab an umbrella? Very dramatic. And my name is Adam from Trade with Precision. And I will be your speaker for this evening. I'd love for this to be as interactive as possible, so please always feel free to just ask questions as we go. You know the drill if you've been with me regularly. While you're reading the risk disclaimer, I'll give you some background. I'm based in the City of London, but I've got some nice trips planned up. I'll be in Ireland in October. I'll be in New York, Thanksgiving, and then I'm somewhere else in January. I'm a day trader for the moment. So most of my stocks portfolio would be more longer term stuff. Hi, Eddie. Hi, Leon. Thanks very much for just checking, confirming the sound is good. And yeah, so I'm predominantly a day trader. That means that most of my trades are probably taken, lately they've been sort of mostly in the morning. But that was just this week. When I say lately, I've just been this week. For some reason, there's been some moves in the morning and then it kind of gets a bit funny in the afternoon. We can have a look at the charts and kind of, I'll take you through it. So I'm a technical trader as well, which means that I'm usually just following what the price action is doing. If it's bullish, then I'm looking to be bullish. If it's bearish, I'm looking to be bearish. Usually the shorter term, lower time frame fluctuations are not really a big thing when compared to the longer term kind of fundamentals. So on the agenda, today we're going to do an analysis of gold, oil, gas, any other major commodities markets with any interesting movements. We will look at critical support and resistance levels to watch out for, which potential trades could be arising from those. In other words, create a watch list of which markets are tradable or potentially tradable. So, and when we do these webinars, I would say that most of the stuff should apply for somewhere from a few days to possibly 1 or 2 weeks. But obviously the goal here is that each week we're doing webinars, so we're updating our analysis as we go. These aren't necessarily longer term setups that we're looking for. So I'm going to go across to the MT5 platform. I've got both. I've got the browser open as well. So if we have any issues, I'll go through with that. And what I very quickly want to do is, just for those of you who are new, the rest of you know me anyway, so you'll know kind of what I'm having to look at. I just want to have a quick look here at euro dollar. This daily candle. It's a weekly candle. I beg your pardon. So this weekly candle that's forming now is, I would say, is a particularly bullish one. I think there's a high probability we'll see price head up from here if we close this way by Friday. It's already looking very bullish. Let's have a look at sterling. Wait for it to refresh. That's also looking really bullish. So the weekly candle also looking really bullish. So all of this implying that the dollar is probably going to take a bit of a break. Let's see about Aussie dollar, US dollar. Let's see if that's also looking quite bullish. All right, let's push them back up now. The reason I'm talking about the dollar and currencies is because the dollar has been the biggest driver for the last kind of 6 months. It's been pushing everything out the way. It's been knocking down currencies. It has been knocking down the indices, and it's been knocking down commodities. They're very highly correlated. That is not always the case. It is, however, the case currently. So this is most likely tied to a combination of factors. The stock market was overbought anyway. It needed to have a bit of a correction on the monthly time frame. We had inflation. All of that was sort of aggravated by Russia invading Ukraine, and then sprinkle a bit of fear and panic on top of that. You kind of get a bit of an overreaction. So just highlighting as well that Kiwi dollar looking a bit bullish. Let's see if dollar Swissy is looking bearish to kind of just complete that. There we go. Nice bearish rejection candle off these levels of resistance. These are weekly charts. So if this is how we close on Friday, I acknowledge it's only Wednesday, but if this is how we if it looks that's how we're going to close by the end of the week, then that would imply that next week we're going to see further weakening of the US dollar. Not necessarily forever, but at least enough of a retracement on the weekly to start off with. So that being said, that gives us a clue. So that actually means that we could potentially see some bullish weekly candles on the indices. So let's jump across and have a look at those. There we go. So we've got a little bit of a bullish candle forming here. This box that I've added here is most likely drawn from one of my previous webinars where I spoke about this being a really good area for the market to kind of find a bit of a base. But I'm going to get rid of that now. And just highlighting that if we get a bullish candle this week, that really does support that idea. So even better is if we can finish a little bit higher. So let's look at the S&P. Also bullish candle, also looking a little bit bullish there. That's good, off a key level. So you can see it's consistent. This is how we know it's the dollar. Now, this is not always the case. I have not seen a sustained control of the markets, unintended control. The dollar doesn't know it's controlling the market. It's just doing what it does, but that's moving the entire market. I have not seen a sustained thing like this for 10 years. There are periods every now and again, you know, maybe a month or two here or there during every year where the dollar kind of does a move up or down, and then it kind of pushes everything out the way. But there's also large periods of time where the dollar doesn't really do anything. It just kind of trickles along. The last year or so has been very, very different. Case in point, look at this entire move all the way down. That's very unusual. And then you combine that with a few other markets, but that's pretty unusual. So I want newer traders to just understand that although the dollar is driving everything right now, that is not always the case. There are going to be large periods of time where the dollar will just go back into its thing, or you know, it'll be very much shorter term. Okay. Let's look at the DAX. So DAX also pushing back a little bit here. The UK, the FTSE as well, off these levels. These are pretty key levels. I would expect to see an attempt at a bullish candle. So I often, when I'm doing the webinars here, I often say that it pays to be optimistic when we look at the stock markets. I'll get to the commodities. I'm doing this because this is the basis for what's been going on with commodities as well. So a lot of people struggle with the fundamentals clash with what they expect. So they're kind of like, why is gold tanking? Should be a hedge for inflation. We get all these different things. But actually, when you start to look at other asset classes, you start to realize that gold's moving lower principally because the dollar is strong. Oil's moving lower because the dollar's strong. There are other factors, obviously in the US, for example, and what's going on. Everyone's trying to find alternative energy and so on. But the consistency of the move across the board, it's clearly the dollar that's doing the driving. Whether it's a cumulative fact of all the different things going on or not. The other thing I was going to add here, and so what happens is, and I feel sorry for people who only look at cryptos, because people who only deal with cryptos and don't look at any other markets will get tunnel vision. Every time the market moves up or down, they'll relay it to other stuff as opposed to the broader picture. So when you look at this, it's very simple to see there's a correlation between equities and cryptos. So if equities are strong, cryptos do well, especially now. It wasn't always the case 3-4 years ago, but it is the last few years, because the last few years, big institutions have started to diversify their portfolios and started to include cryptos, and they've got big money. So they've started to add cryptos to things. And they've started to bail on cryptos just like they did on bailing on stocks, because there's a bit of fear and panic. So, but if you only look at cryptos, you're going to misinterpret what's going on if you don't know what's going on in the bigger picture. So I just wanted to show you this. Let's look at the ASX as well. There we go, a bit of a bullish candle finishing up there as well. So we've got, there we go. These are good. Oh, so I was saying that it pays to be optimistic with regards to the markets. Despite the doom and gloom, it makes sense to get bullish reactions at these levels. And it might be a double bottom. We could actually have a recovery from here. I'm not saying we will. I'm saying we could. In my experience, trading for the last 11, 12, 13 years, people always underestimate the stock markets. They always think it's going to tank for longer than it does or further than it will. And yeah, once in a blue moon, they'll be right. But the majority of the time, the market will surprise you. It's more robust. What's the word? It's tougher than you think. Okay, so remember, don't forget that all the central banks are trying really hard to combat inflation right now. People cut back on spending and there's a bit of a recession, the inflation will halt in its tracks pretty much. Ray Dalio and Michael Burry. So Michael Burry is from The Big Short. Ray Dalio is from Bridgewater Associates. They're very sharp guys. I trust their analysis. Both of them have explanations for why they feel there's too much debt, and the debt is going to fuel QE, which adds to inflation. It devalues the currency. And until you fix that, we've been heading this way for a while. So their biggest fear is that you get what's called stagflation, which means you have low unemployment, but you also have low growth. And you might even get to a point where you have low growth and then unemployment starts to pick up. But again, as I said, once inflation comes back under control, once we have sort of COVID in the review, mirror, and hopefully once this war with Russia is kind of wrapped up, then we'll get a really clear picture as to how bad things really are, because right now it's buried under all that other stuff. So let's have a look at crypto very quickly, because I'm just doing a market-wide kind of look, so that's okay. Ethereum is a little bit stronger than Bitcoin at the moment, not much of a change there. Let's have a look at something like Disney as well, just a couple of stocks quickly to get a sense of that. Okay. And let's have a look at some of these commodities. So let's go through to wheat. Wheat's quite bullish at the moment. These are weekly charts, so they're quite strong. So the other thing is, excuse me, if we, I'm going to also give you a little bit of an analysis, kind of a little bit of a point here as well. If we, what do we have here? It was dollar, Swissy, was it? Yeah. So here's an interesting thing. If we get a bearish candle off a level, so please, for the newbies, it's not just the shape of the candle, it's the location. Candles that form certain things at key levels are way more significant. Those are the ones we want to take seriously than randomly in the middle between kind of these levels. So these candles here, they've got a lot of wicks above and below because there's no real drive happening here. As soon as the market knows where it goes, the wicks start getting smaller and smaller. You've got long body, very small wicks on either end. And that's when the market kind of knows where it's going. So I'm telling you this because if we get a bearish rejection candle here and we get a very bullish one across the board, the implication is that the next week the market is going to head lower. So now I'm talking about a trading plan that we're going to start to implement, and we'll go through to the commodities. So in case you're frustrated, I'm not on the commodities yet. I'm doing a market-wide thing, and I think we have time. So the idea is that if this finishes bearishly off a key level, that we've had a couple of rejections here, that if the next week the candle breaks the low of that, there's very likely to be a follow through, at least kind of down, probably towards the moving averages, if not back down to this level. And if that's going to be the case, that allows us to create a bit of a trading plan to look for shorting opportunities for the next week. So in other words, what we're doing is we're going to take it 1 week at a time, because this candle, if it sets up, it's a big deal. Let's go across and have a look at the commodities. Is what I'm saying making sense? Sorry, just let me do a temperature check here and see if it makes sense. A couple of new names. I recognize pretty much everyone. There's one or two that is new to me. Okay. So let's start off with gold. And I think just to get some perspective, oh, and again, another trick to getting perspective, and we have to do this. Although I trade the 15 minutes on a daily basis, I want to know if we're hitting all-time highs like that. I could be on a 15-minute chart and price could have hit this level and then had a massive reaction off it, and I don't know why. But when I look at the monthly, it makes sense. So something else I'd like you to keep in mind is that before we had charts, before we had computers, so if you go back to the 80s and 70s and further than that, before we even had charts, we were using price. So the one thing where fundamental analysis and fundamental investments and trading overlap with technical trading are price levels. These are the levels where, fundamental analysis, I think gold is overbought at this price, or I think it's a good price to buy at this price. And we can see the market's reaction to those levels. So price levels are really the core thing. So if I have nothing else on the chart except candles and support resistance levels, I can trade because I can see if the market reacts bullishly off a level, and therefore it's probably going to go up to the next level. If it reacts bearishly here, if it doesn't react bearishly here, it might break through and then it might work its way up to the top. It might do it in a very nice, simple trending fashion. So here you can see it's very simple, sort of broke through that. There was a push through, went up, came back, pushed through again. This is actually a double bottom. So I'm going to give you guys a massive, massive tip. Double bottoms and double tops within a trend are incredibly powerful. So a move breakthrough here makes sense. Then we push a little bit higher. Then we come back to retest it. So it's called a break and a retest. But if you didn't look past the left here, you would just see a double bottom and it breaks up. Double bottom is very bullish. And where else are we seeing that potentially? On some of the other charts as well, like I think it was Kiwi dollar or Aussie dollar. So the perspective here is we've broken through this level. We have broken through this level. And if we close back up above that level, that would be an incredibly bullish candle. Okay, it would be an incredibly bullish close and a very aggressive move to the upside. it doesn't mean we're necessarily at the bottom of, and from now on everything's going to go back to normal. It doesn't mean that, but it does mean that at least for next week, we can reasonably expect the markets to attempt to follow through. And so I would expect them to push higher. Now, the only reason I want to show this is, yes, we broke to this level, but to give it some perspective, I'm going to go through to the monthly. So if you look at it from a monthly perspective, what's happened is we've come back to that 50-period moving average. Okay. So, and I think it's also very important, by the way, to see where the monthly candle closes. If the monthly, it's the 28th, so we've got 2-3 days, but if that closes nice and bullish, if that's a green monthly candle, that's again another very significant signal. Then it means we kind of maybe had it was like a false breakout or just an attempted breakout. But that bounce off the 50-period moving average could ultimately mean that we go back. It's not a guarantee. I'm saying that if we get a bullish response to this. On the other hand, I would say that if we close below the 50-period moving average, then we are very likely to see gold start to head lower. So now we've got to look at the other levels here. Round numbers are a really good place to start. 1,500, 1,600 with gold. Nobody's responded. I'm just checking. Is what I'm saying making sense? Nobody responded when I asked earlier, so I'm just going to check that. So that's a really good place to get started. I also want to pay particular attention to areas where the market has tested a price from underneath as well as from above. Okay, it's very significant for both buyers and sellers at that time. Okay, so if you go look here, there's a bit of a level here. I'll focus on sort of recent levels, and that's really it. That's kind of, these are going to be the ones I'm probably going to have a look at. And for now, that makes sense. The price would then most likely start to head down to this level. Cool. These tools don't mean anything right now. They can't help me right now because they're very powerful on a trend. They're not very useful if we have market that's kind of ranging all over the place. That's a very bullish candle, very bullish engulfing. You can see all these lines here that are automatically generated. They are significant because of the colors. They are weekly and monthly sort of candles. You can see that support weekly 1, resistance daily. What's this one here? What's the green one? Support. What's this one here as well? Okay. Excuse me. So these are quite significant. We have to get through that. All right. This is nice and bullish. It's a good start, but we have to get through this level. If we get through it, then we're going to start working our way up towards these highs up here. Okay, and certainly back up towards the 50-period moving average. So we're going to look on the 4-hour. You'll see there's some a bit of bullish divergence. We've got some fresh lows here. These are starting to creep up a little bit higher. That work? There we go. You can see those are trending higher. Same thing up there. We're starting to get that bullishness. Okay, some very nice, strong bullishness. And so my expectation so far is that this is going to try to finish strong. We'll see if it does, and then we'll try to see it push through. This is good. And so that looks relatively bullish. So for me, the real thing in terms of analysis is just what happens with this level where we are here. The best thing for me is if we could finish ideally above that level. It's not guaranteed, but if we could, that would be fantastic. Then that implies that we might have a good chance at working our way up here next week. So that's very cool. So I'm going on to say the 15 minutes as well. You can see now it's running out of steam. It's been moving. It takes a lot of energy. So the market goes very aggressively. So for some of you, you'll recognize that I've spoken about this. Change the color. The market, when it starts its trend, the angle is usually very steep. The pullbacks are very shallow. Angle is quite steep. Pullbacks are shallow. And then it starts losing its angle and it starts doing deeper pullbacks. Losing its angle, deeper pullbacks, losing its angle. So it starts to roll over. And you can see that happening here. So this is, in other words, it's expended a lot of energy. What it's going to need to do at some point is probably come back to here, probably tomorrow or something, and then continue up from there. Another good little thing is looking at, say, the 4-hour candle. So if we look at, say, this 4-hour candle, it's very reasonable, I think, for the next candle or at some point the candle to come back about halfway. So come back about halfway and carry on going up. So that's kind of a normal type of behavior. You can see a very small retracement here. Usually if they're edge to edge, that's either a very strong trend or it's not necessarily a good sign. But yeah, we prefer for them to come back a little bit, even to here would be good, and then push on. So does that make sense? You'll see here where these candles overlap. They tend to overlap. You get a candle and then the next candle, they overlap. So that means that if you zoom in on the lower time frame, you always get a move that does this, and that's the one candle overlapping with the other candle. Hopefully that makes sense too. Cool. So that's looking relatively nice and bullish. I needed to kind of start to find some support. Today, I would say that it's not worthwhile taking a position now, because I think it's done its moves for the day. And it's quite interesting because if you, excuse me, if you took a sort of a much more longer term, this is a downtrend, by the way. Very important that this is a downtrend. If I was super patient, I would wait until I get a high, low, high, high. You know my rules here. Break above a previous high and ideally get above that 50-period moving average if I was looking to buy gold as a slightly longer term kind of investment. Not a trade, but a potential investment, a possible trade idea. And again, this is important how this finishes would be, and it's higher risk. It's a higher risk trade because I'm going against the trend, is to put my entry there, stop loss there is a buy position and take some profit obviously at 1-to-1 as we approach these levels. Because if it is ultimately going to start to work its way up from here, this could be, that would be a really good kind of candlestick, but I don't know that for sure. At the very least, I expect this, if it closes strong, to probably come up to about here at a minimum, possibly up to about here. So that much I think is high probability, but beyond that, I'm not so sure. So when we take a trade, we generally want to trade with the trend, not against the trend here. So this would be trading against the trend, and therefore the risk is higher. So I either acknowledge the risk when I take the trade, or I don't take the trade because I have a rule, maybe I don't trade against the trend, or I reduce my risk. Instead of 1%, it's 0.5%. And also it's a monthly or it's a weekly candle. So I'm gonna have to wait a week for that trade, but that's fine. I'll do other trades in the meantime. Does that make sense, guys? So that's how I could take it as a longer term trade. All right, so I could see how it finishes on Friday, place my order on Sunday night or Monday, and then write it out. Now, let's go and see what's happening on the lower time frame. So what would I do with this on a lower time frame? Well, for now, it's still downtrend on the daily. On the 4 hourly, it's just finished. What it's done is it's broken the downtrend. Because we've broken this high and actually that high, we've definitely, this downtrend that was in place is done. Excuse me. It's done. So what I need now is a higher low and a higher high. Then I can start buying or being more aggressive with regards to my positions to the upside. This is for day trading purposes. It's overextended now. It's going to have to come back. If we go look at it from a 1 hour perspective, it's going to have to come back down, probably back down to, so in other words, it has the potential to come back down to here, possibly, and go. However, it might come all the way back down to here or to here. So those are the 3 places it might come back to. And so that's what I'd be looking for, 1 hour entrance. In fact, just wait for it till tomorrow. Just want to see what happens with that. You could, again, I spoke to you about double bottoms. You could have a scenario where price comes back here, goes up, goes here, comes down, and you think, oh no, I bought tails or I took a trade long, and then it does this because it does a double bottom. Okay, just be aware of that kind of thing. You might not see a setup here, so you don't get in, and then you see a second setup here. You see a double bottom, nice little bullish candle, nice little green little setup like that. Entry above the high, stop loss below, maximum 1% risk, target, take some profit at 1-to-1, target, up to the next level. Okay, some definite bullish divergence up here, and these are looking good. That's not looking so bullish, the divergence not so strong. So that's it. Let's have a look at silver so we can compare this. That's cool, because now we've got a potential higher low. So a higher low, bullish candle, that's really good. And it doesn't have to go very far to break into an uptrend. You'd have a high low and a high high. You'd be an uptrend on the weekly very quickly. So that silver might, I'm generally prefer gold. Silver might be a better trade in this particular case. And again, because yeah, once you break through here, you're going to get quite bullish. So I think the market's going to make it up to here. I think so. But beyond that, I'm not sure. So again, this is what traders are doing. They're assessing the idea and then the probabilities. And then at the same time are going, well, yeah, we might go all the way up here from down here, but I don't know that. We might only go here and then reject. But the probabilities of us going to here are the highest. So silver is looking good as well. Same approach as gold would do that. Let's have a look at some of the other ones. So what else we got here? We've got platinum. Yeah, it's also doing the same thing. So it's giving me the same approach. I prefer ones with a higher low. The one with a higher low is more bullish. It's not as bearish because then you're not necessarily trading against in a downtrend against the trend. If it's got a lower low and you've got lower highs, you're in a downtrend. With a slightly higher low here, you could have what's called an inverted head and shoulders. It doesn't look like it, but you've got there's the head, and then you get the shoulders. Because, guys, the rules are a trend, that's a downtrend, lower highs, lower lows. When do we go into an uptrend? Well, we could do this as a double bottom and then go there and do a high low, so that there's an uptrend. The second we become an uptrend is actually there, potentially. Or, sorry, well, the second the downtrend is done is when we breach that, because all the way here we've got lower highs. So that's still a downtrend until we breach it. Then we pull that, we have a higher low, and then we break above that. That's a confirmed uptrend. Excuse me for 1 second, just going to close my door. So then that becomes an uptrend. Cool. So the same kind of thing, we've got Palladium. This is also looking really good. Series of high lows, lots of green candles. It's got a battle here, but this is definitely more bullish than silver, gold, platinum, everything. It's looking really good. It's going to have some battles here, but there's lots of buyers there. So we're seeing, again, notice how we're seeing that correlation between all the different ones. You don't have to trade them all, and you don't have to only trade one. If you see two good setups, you could take both, but you are increasing your risk. And the universe loves to teach us a lesson. Oh, okay, you've taken 5 different JPY trades at the same time. Well, then we're just going to have to interfere with it. Universe loves to teach us a lesson that way. It loves to spank us. So cool. And so let's go ahead and have a look at oils. What do you think is going to happen with oils? I haven't looked at it yet. I was looking at it this morning. I haven't looked at it now. But I presume if everything else is looking bullish, we might see that there. Let's have a look. So this is Brent, UK oil. Okay, it's pushing back up as well. Definite downtrend. Get the perspective here. Okay, so again, you'll notice on the chart I have the 50, the 20, and the 10. 50, 20, and 10. Right. And when the price pulls back, into the 10 and 20, the area where the 10 and 20 moving averages are, produces a bullish candle. And the next candle breaks the high, it usually leads to a good move. Price is now in the area between the 10 and 20 period moving averages. So this is a good area for it to turn around. It is, if it's going to. This is the right area for it to do. It's got a beautiful level of resistance, which could be support. What I need now is a nice green candle, and the next candle to break the high. And that would be it. But that is what I'm seeing. So this is potentially looking good. Yeah, daily is also looking bullish. This is a particularly strong candle. Could we get here and then run out of steam tomorrow, and by Friday we're back down? We could. The dollar consistently has been kicking everyone down. It's been consistently doing that. Case in point, 2 weeks ago we had the CPI numbers come out of the US. And this was just turning around and going up. It was looking strong, and CPI came down, and that was it. And we had that big move down. But the market is pushing back again now. So euro dollar is probably going to head back up to here to test that for resistance, if at a minimum. And I think a few of the others will as well. So I'm bringing this up because I think it's going to pay. It should be rewarding to look at other charts at the same time, to keep an eye on where they're going. Because if they all start to reach these resistance levels, that could be it. The move could be done. So for now, it's hitting potential resistance now. Otherwise, I expect it to make it up here towards 93.70. And then we'll see what happens. Might go as far as 96. It really does depend on how strong this dollar kickback is going to be. Let's go look at the dollar index. So the dollar index here, DXY. You can see that big, strong rejection. There's also a major level here. That level is 114. What is it? 114. So 114, big, strong, bearish engulfing candle. This usually means we get a retracement back down to here or a bit further down. So yeah, the implication, ladies and gentlemen, is that we are going to get a weaker dollar for the rest of the week, probably, and next week, potentially. Could it be the turning around over the next few months? Yeah, it could be the start of it, but we don't know that yet. We'll need more information. So let's just start with next week. What do you think is going to happen this week and next week? Okay, so let's go back up to that. So we looked at Brent. Let's look at West Texas Intermediate, which is US oil. Very strong bullish candle here as well. Look at the 4-hour. Yes, a bit of bullish divergence overall, not a lot. For now, I expect it to just keep pushing maybe up to here. Nice and strong. It is going to have to retrace. So I expected overnight to come back. Let's do a Fibonacci. So let's imagine that we have a fib level, and let's say it goes, I don't know, it's going to keep going for the next couple of hours. So let's keep it here for now. It's reasonable to expect the markets to come back to this area. If it's very strong, it'll do a shallow retracement and keep going. Or it'll go all the way up here, come back, and then go. But it's overdue now. So tomorrow I'm going to wait for that retracement to finish, and then I'm going to see about what's happening. That's pretty cool. Let's have a look at some of these other commodities. So crude oil, gold, all of them appear to be setting up to go long, certainly for tomorrow. If tomorrow they keep going and they finish higher and they look like they're going to finish there on Friday, then I think next week we're going to see a continuation. So we have to keep in mind 2 or 3 different potential outcomes here. We have to keep in mind that maybe tomorrow something will happen with the dollar, the market will panic and it'll just give it all the way back. But you can see the size of these daily candles across the board. They are big. It's different. We haven't had something like this in months. So this is different. But I'm not going to assume that it's all plain sailing from it. I'm going to expect that dollar to fight back a bit. This is why we take profits as we go. So for example, let's just say the price comes here, pulls back. I'm expecting it to go all the way up to here potentially. I get a very nice little bullish candle, nice green candle, nice wick, put my entry above the high, stop loss below the low. Ideally, I want to make sure I've taken some profit here so that if it bounces and comes back down, I am break even. If it keeps going, I'm targeting probably just below that level, just below the level. But at least that 1-to-1, I'm looking to take some profit. You know what could happen? It could do that. Come back to here, would have stopped me out, sets up another bullish candle. This is the kind of stuff that happens. Sets up another bullish candle, another entry, and then it goes like a double bottom thing again. That stuff happens so often, most people don't notice it. Look at that wheat. Wheat's bullish. That's good. This is good for, like, there's a bit of a mess up here, but that looks pretty good. I'm expecting this to keep going up. For now, sugar. Sugar's a mess. When we look at sugar, it's got nothing going on. If your daily chart just looks like this, candles like this, the last 6 to 10 candles, you just walk away. It's just a blender. It's just going to kill you. So if you look at it on the 4 hours, it's just that. You can't trade that. So sugar's a pass. Cotton is bearish at the moment, looking very weak. Coming back down to an old level. But so far, it's the only commodity we've seen that looks so weak. Doesn't mean I have to sell it. Just that it's not going the rest of the way the rest of them are. Cocoa, good rebound off here, but it could be coming back into this area to test that level for resistance. So I'd potentially I'd be a bit more cautious with that one as well. Look at coffee. Coffee is like sugar. I mean, coffee is like wheat. It's looking more and more bullish. Looks like it wants to hit up. There's a problem level here. And there's another little bit of a sub-problem level there. So again, I want stuff. So think about it like this. Here's your logic. You want to trade something where the trend is clear, the direction is clear, and it's got very little resistance or support in its way. It's got lots of room to run, because then it's the path of least resistance, and it's got a greater probability to keep going. And so if you have, of all the charts we've looked at, although I can see which way this is going to go, I still would not trade it because there are better opportunities on the other charts. I'd rather get involved with gold or crude oil, for example. So you don't have to trade everything, even if you know which way it's going to go. you really want to pick charts that are going to present you with fewer problems and therefore less stress. What else we got? Let's go through. Those are our commodities. See, that was quick. Energies. That's fine. Brent, that's fine. Softs, OJ, we can look at if you want. Soybean and corn. I mean, I feel like we're dragging the bottom here. OJ, orange juice. That is bullish, obviously. We've got soy is range bound, so you can see it's just generally stuck there and generally stuck there. So not really worthwhile trading. There are times, I mean, I've seen there was a time, I think it was the year before last, soybean was printing. It was just trending and trending and trending. It was unstoppable. It was unstoppable, looked pretty good. Okay, so there's really very little that looks that great. Corn coming back, this is interesting here. So I was talking about double bottoms, but this is not necessarily the same thing. So we had price trend up, pullback, nice little twin double rejection there, which on a lower time frame is a double bottom, but then it hit resistance here again and came back and broke this low. So it might range again, but it's not as strong now. It's actually tested new lows, failed to test new highs. So now it's more bearish than bullish. So it's a, although it could be a potential buy setup, you would be cautious with that. So that, ladies and gentlemen, is commodities. I mean, I don't think I was going that fast, but I feel like we've covered everything in already relatively quickly. Let's have a look at some of these equities. Let's go through. What's Tesla looking like? Again, I want to see it from a monthly perspective. Range bound, bullish candle at the bottom. What about Microsoft? Yeah, levels of support here potentially. Just go through and get these out. Just excuse me. So nothing clear just yet. We've got Amazon. How's that doing? Amazon. Okay, that looked good. Bit of a push there, high low. That could be good for Amazon. Pushing back up to here. This depends if we finish the week strong, ladies and gentlemen. That's going to be a very interesting. That is something I haven't seen in 6 months, 7 months. That could be an interesting thing. Google. I'm looking at the strongest ones. I'm looking at the biggest, strongest ones. Here we broke through this low, so we need to get back up above it. Then it's a false breakout. Otherwise, if we close down in it, it's not a false breakout. Then we're probably going to head lower next week. So that's why I'm saying a lot of this is interesting because of that. Apple's under a strong recovery. Well, the US session is still only getting going. McDonald's, big strong push across the board. Coca-Cola. Also breaking through that level, but finding support here potentially. All of these are interesting to me. Amex, usually quite interesting. Amex, these things can print because yeah, you just often have to do transactions. So we sort of could be range bound for the moment. It could be something that happens. We'll see. We'll have to see how that goes for the rest of the week. So thank you for asking about a book. So I've just done one called the Day Traders thing, which is on Amazon. But I might just send you a copy for kind of send you a copy for free, at least a PDF or something. But yeah, and then the other books are in the making. So the first one's out, but the other stuff would be better. I want to do separate books. I want to do what's called the Master Trader series, where you do one is price action, then support resistance or indicators, and then yeah. So one on indicators, one on price action, one on support resistance levels, or that kind of thing, and writes a separate book on each thing so that you can master it. But I'm not sure how thick each book will be. Okay. And I appreciate the feedback, by the way, I really do. So, okay, so in terms of, again, let's just go have a look at some of these things here as well. So let's go see what's going to happen again here as well. So we're overextended. So this is the annoying thing. This is such a tricky thing for every trader to get used to, is when we become overextended. You've kind of got to keep your eye on these levels. For those of you who are new, I'm using what's called fractal support resistance. You can get it there from indicatorspot.com. It's free, and that just draws, you just drop it into your indicator folder, and it should show up here when you restart MT5 or MT4, and then you can drag it on a chart and you get these support resistance levels. And they're pretty good. They're pretty good. I mean, I'm happy to draw my own, but these ones are really not bad, and for most people, they can help quite a bit. So we've got this bullish divergence. We've broken a whole series of highs here. This 1 hour is definitely not in a downtrend anymore, but we do need a higher low. And we also need a higher high. So we need that to happen, I would say, before I start taking any trades on it. So how could that work? Well, maybe I get a red candle. Let me change the colors. Let me do this in more detail. So maybe I get a red candle and then another red candle and then a green candle. Okay, I could take a trade here, but I still don't have a confirmed uptrend. So that's higher risk. So then what could happen is I could get triggered in. So then the next candle could break up and then close down here, stop me out. That could happen because you're going to have a battle at this point. When the market comes back here, this is going to be the point where the first bunch of buyers are going to come in and the last sellers are going to battle. They'll battle it out. So you could have something like this. The next one, strangely enough, could end up being a green one again, for example, then it comes up here. So this is what I would prefer to see happen. They'll have their stops above this area. The sellers will have their stops here. And then I will look for a green candle. So remember, I'm still not really wanting to get in here. Then what I'd be looking for is a nice break here. So now I've got that confirmed uptrend. I'm back above these levels. I'm back above that high. The next candle gets really interesting because if you zoom in on the 15 minutes, the next candle will probably come down, tap here, and then carry on. Because remember, your candles overlap. So on the 15-minute, I'd see price coming back down to here, and I'd look for a potential buy opportunity there. Entry there, stop loss there, take some profit, and then ideally see how far it's going to go, if it can go all the way up here. That is my trading plan for tomorrow. That trading plan, in theory, can be replicated across the board. Yeah, it can be, meaning that it can be this. It's the same thing I'm going to have to look to see on gold. Same thing I'm going to have to see on cable. It's the same kind of idea. So it's the same approach. Would I take them all? No, probably in reality, probably about 3 or 4 of them. Maybe I'll take euro dollar. Maybe I'll look at Aussie dollar or something. Then maybe I'll take gold and a bit of oil. And that's kind of it, because taking all of them is a bit crazy. And it's a lot to manage. And they won't all move exactly the same. Some will just get tired. Let's look at dollar yen, because you need to see, and so we need to get some perspective here. Look at this exhaustion here. We're overextended away from the moving averages. We had a chair, then we moved up, but then we came back. And here we've got it 3 or 4 weeks in a row. So what I'm looking for here now is a bit of a red candle, which would probably signify that the shift is starting to happen from buyers running out. They've run out of buyers. So if I get a red candle here that closes, then I would look for a break of the low that then I would expect price to come out to here, potentially back down to here. We're not having it yet. Part of that is because the yen is still weak. If we look at other yen crosses, you've already had a bit of a correction. Now it's trying to carry on. So the yen is still weak. So euro yen, we've got a bit of a stronger euro now, but euro yen is also heading up. Let's look at pound yen. Also a bit of a correction and a very strong rebound. Aussie yen, bit of a correction and a bit of a strong rebound. I'm going to explain what that is now. Strong correction, bit of a rebound. So the yen itself is still weak. Dollar yen is different. Dollar yen, this is, I mean, I could probably verify it somewhere, but it seems in my experience that Japan has a very specific, the US is their biggest trading partner. So they have a very specific mandate and policies with regards to the exchange rate because it impacts the economy with the US. So dollar yen will do its own thing and the Bank of Japan will moderate that. But the yen against other currency pairs, they don't really care about. So although we've had a weakening yen most of the last year, dollar yen has been the strongest. When you compare it to euro yen, not as much. So dollar yen is kind of a clue. It really doesn't want to quit. It will eventually, but it really doesn't want to do that. And so we can see that it doesn't want to quit, and we can see when we look at any of the other pairs, they're all trying to get ready to push on again. And I'm inclined to think that's the yen that's weakening again. So the problem we have now is that the Bank of Japan have said they're getting tired of it weakening now. They don't really want that to be the case. And actually, I don't think they care about it against other currencies. I think they only care about it against the US dollar. So they're probably going to start defending this area quite a bit. So I'm a little bit more cautious trading the yen pairs. I probably trade just lower risk, so 0.25% or 0.5% per trade. And be very cautious. And if there's a sudden reaction here, then I know why. So there are times when you take a trade where you know that it could go wrong, but you might be able to get to your target before it does. That sometimes happens, and sometimes it doesn't. Sometimes you're like, for example, you might see a trade, non-farm payroll, right? It's the first Friday of every month. US job numbers come out. Well, the market just loves trading it. They love, algos like to trade it, all kinds of things, but most traders will stay away from it. But you can get a big move and it can swing in multiple directions. And then at the end of the day, it can just decide which way it's going to go and go. So you can get some big moves on it. The reason I'm mentioning this is because I've forgotten my train of thought. Why was I bringing that in? Because maybe Friday morning comes along. So this will probably be maybe this Friday that we'll have NFP. So Friday morning comes along and you're like, oh, there's a fantastic trade. So you take the trade. But the problem is that if you're in the UK, by around about 11 o'clock, your trade might start going into a coma. So because now the market is forward looking. So now it's just waiting for NFP. So if you've already got profit on your trade, you probably should just move your stop loss to break even or close out the trade, because now it becomes a 50-50 toss up whether you're going to get stopped out or hit your target when NFP comes out. And so that my point there is that that's an example of when you could get into a trade and then realize it's not going anywhere, you might as well just close it out. So is there anything else that anyone would like me to have a look at? Shall we have a quick look at the Nikkei, the other indices? I'm bringing this up because some of them are weaker. So for example, Hong Kong is very bearish in comparison. You can see a bit of a pushback there, a little bit of bullish divergence. I'm not finding the RSI very sort of visually reliable here. So not much happening there. What about China? China got their own problems here, but also you can see it's trying to find some support. So interesting. So that makes sense to me because they are much weaker than the rest of the world. But when you go and have a look, even Nikkei is actually more bullish. Nikkei's fine. A lot of wicks here. So these are very important. They're telling you stuff. You can see there's a lot of buyers. There's a lot of buyers below this area. So all along here, there's lots and lots of buyers. They might buy and then get out here, and then it comes down and then they're not there anymore. That can happen, but you get a mixture of shorter term and longer term buyers. And so it's when your candle starts closing near the lows, big red candle starts closing near the lows, and there's no wick, then the implication is it's getting weaker. It's probably going to head lower. But right now, we have, please note, we have a series of higher lows, potentially seeing how this closes, and we've got high highs. So we're drifting higher slowly. We're still not in the clear. We're not trending like this, but we are drifting higher. And also there's a lag. I've said it before, but there's a lag. There's about a 3 or 4 month lag, maybe even 5 or 6 months between when the market has already been trending higher before the market reluctantly says, okay, we're heading back into a bull market. There's always a lag. Pound yen. So let's go through all the GBP pairs. So all we're going to do is look at them on the daily, and we're going to go through all of them. So let's look at pound Aussie. Okay, we had a drop, boom. This is to do, it's interesting because it's not my area of expertise. It was to do with the gilt and bonds on sterling that effectively caused a bit of a lurcher combined with policies coming out of the new government that triggered it. Strong rejection there as well. So the pound obviously got quite cheap. So it is volatile. It's volatile because we've just got a new prime minister. They've just announced what their new policies are going to be. The principal feel of it is more like more tax breaks for the rich, more trickle down, which is bollocks. We know now for a fact that that doesn't work. If you want a strong country, you need a strong middle class. The middle class is what carries the country. If you just get a wealthy upper class, you just get everyone else is broke and everything falls apart, and then corruption is rife. Get a wealthy middle class, you tend to have less corruption and a stronger, more robust is the word I was looking for, robust economy. So that's a really good strong finish back into this area. Let's look at pound yen as well. So pound yen, yeah, look at that ridiculous kind of drop and a push back up. Yeah, so that's probably going to come back up and test this. So We still have this hovering over our heads. We have the Bank of Japan generally wanting the yen to weaken. So if we get some bearish candles here, that could be a signal. Anything like that at that level could be a nice signal that it's going to continue down. We'll see. If it just breaks back up above that strong bullish candles, then we're probably, we've now what's different this week and next week from the last few months is that now it's not just the dollar. Other central banks have started to get involved, and so the pound could start strengthening. Maybe, I'm not saying it is, maybe it's going to keep weakening, but we're going to find out when it gets back up here. And we also know Bank of Japan is interfering. It sounds odd, but the best thing I'm going to do is probably follow the price action. If the price action reaches this point and it's very bullish and it's not looking very bearish, it's probably going to break through and keep going. So I would just follow that. In that particular case, maybe the pound is strengthening a bit and the yen is weakening a bit, so it's just going to keep going back up. Big clue is always in the weekly. Look at that. That's an incredibly strong weekly candle. So that would imply we're going to get we might get a bit of a reaction and head up a little bit higher. Could happen. So that week by week is the best way to do it. Let's have a look at pound Swissy. Okay, pound Swissy's they've got their own problem as well. Swissy keeps strengthening. So the S&P are complaining now because their currency started to get very, very strong. So they're going to start twitching about that. As a general rule of thumb, I would be very cautious about trading pound Swissy. And I would definitely make sure I have stop losses in all my trades, guys. Let me explain why. I was trading when the Swiss National Bank, well, let's do this. I was trading at this point when they intervened and pushed back. They didn't tell anyone. So suddenly it doesn't matter what you're in, they push back. And if they do it fast enough, guys, they'll do it at 8:30 in the morning. They do not care. I want to swear and say they don't give an F. They will do it at 8:30 in the morning in prime time, and all the brokers around the world might not even be able to, like, if you don't have a stop loss, you could move something like 600-700 pips if you're in any of the Swissy trades, and it actually upsets the other currency pairs as well. Spreads widen, the liquidity goes a bit funny, so it's really big to do that. And so if you would rather, I promise, on those, if you had any trades open that day, have your stop losses hit and just be out of it. Because if you didn't, when you ever hear about your losses could exceed your kind of account size or something like that, that's what they're talking about. When they do something like that, suddenly you could find, if you don't have stop losses, you could be like, your account could just go wacko. And the thing is, it's not even the broker that can do it. It's the liquidity between the banks is gone nuts. I was also here when they then depegged it, and this was insane. My spreads on pound Kiwi, I had a pound Kiwi trade open. My spreads on pound Kiwi went like 200 pips, like a spread 200 pips on pound Kiwi. It had nothing to do with CHF. Everything went nuts. The banks weren't even answering their phones. The brokers were phoning, the banks weren't even answering their phones. So in a situation like this, that can happen. And so I don't trust them to not start doing silly things here again. So I would just say, maybe for a few months, if you can avoid it, or if you're very cautious, stay away from anything with a CHF in it, potentially, and keep an ear to the ground anywhere where you hear about S&B, are they going to potentially intervene? Because they start squawking about it and then they just do it. I hope they don't, because they keep damaging the kind of markets. But you can see over time it just keeps getting stronger. Every pair just ultimately goes against it. And so, yeah. Pound CAD as well. Strong pushback here. So I'm expecting, for now, I'm expecting the market to attempt to push back up on the weekly if we finish strong. But it is important how we finish. If we don't finish strong, if we finish back near the open or close, if we finish back there, then it's not as strong. We need to finish with a really strong green candle that finishes near the high with very little wick. That's usually an incredibly aggressive bullish close. And that would imply that there's momentum to the upside. If we don't, if we come back down and we sort of close, although we have a rejection, usually what happens then is you get another candle going down, so that it might continue hitting low. And I think the highs and lows of weekly candles are quite important. So you need, if we finish strong, you need the next week, you want to mark the high of the weekly candle. You want to see if the market's going to break above it. Okay, so then it's going to follow through. So you get that rejection of the low, then I need to see a follow through back up to these levels. And because we don't know if over the next few months the pound is going to strengthen or weaken, we don't know that, we treat it as though it could get here and find resistance and carry on down. We never trust it. Oh, this is definitely the turnaround point. So another thing I was going to talk to you about, a couple of minutes left, is arguably that could be a trade, like your entry, your stop loss, but this is a weekly time frame. And that's like 500-600 pips, which is ridiculous to be able to go for a bit of profit here or there or there or maybe there. So you wouldn't take the trade off the weekly. You would take the inspiration for the trade off the weekly, but you wouldn't actually place your trade here. You would go down. You would need a tighter stop loss. Excuse me. So what could you do? Well, arguably, this is a bullish candle with nice rejection. You could put your stop loss and entry there. Less. It's fewer pips. You could do that. Imagine that this was Friday and that's how I closed on Friday. Excuse me. This is good. This is good. I would do this. Entry above the high, stop loss there. You could do that. Because it's range bound and we'd have to break through, would go up to the upside. You could do that. Could I go further down? So it's the same idea, but I want to see if I can get a tighter stop loss. This is the problem. This is the most recent low. If it's range bound, now you're dealing with statistics. You could say, well, look, there's a bit of a level here. I could chance it. And when I say chance it, it's all about risk. You could put your stop loss there and your entry there. So you've now managed to shrink your entry to stop loss, make it a bit better. Could you go do a bit better than that? Well, it gets tricky. Now we're down to the 15-minute time frame. Again, entry there, stop loss there, or there. If we managed to do it, and that was my entry above a break of the high there with my stop loss here. What does it look like on the higher time frame? Let's go back up to that weekly. So it's so small now you can't even see it. That would be a much better reward to risk. Same idea, but better reward to risk. Actually, that I would put my entry there. Sorry, above that high. Above that high. Does that make sense, guys? Let's have a look at some of the other yen pairs quickly. CAD yen, trying to set up bullishly. Also the weekly candle, I keep an eye on it. So all of these might be setting up to carry on going. Look at that, really doesn't want to give up. Came back down, tapped that, and now it wants to keep going. But this is a problem. When you see something like this, even though it's bullish here, this is a problem. I think it could go up and then just fail. So I'm usually very cautious with those. You can see when the wick starts coming in, that's usually where it starts to precipitate coming back down. How are the other pairs doing? No, that's fine. Aussie yen looking bullish. Aussie Swissy is looking bullish. If you are confused between what you're hearing in the news and what you're seeing on the charts, you always go with the charts. Hi Diana, very nice to have you. No, it's okay, it's okay. If you're ever conflicted between what you're seeing in the charts and what you're hearing in the news, go with the charts. It'll spare you a lot of pain. So let's just say that you're hearing doom and gloom in the news and you're seeing very bullish price action in the charts. Go with the charts. Okay. Because our instinct as a newer trader, our instinct is always to trust. Our gut is torn. We have this bias from the news and the media because we are social animals and we are very much influenced by the crowd. You can't help it. It's a survival thing. If the crowd is running one way, you're going to be torn. You're going to want to run with them, even if you don't know why they're running. So the media is the same thing. If we start to get this bearish sentiment and we're listening to very bearish stuff, then we should go with a price action. So most of you have attended my stuff over the last couple of months. You can generally see how my price action analysis plays out over the next week. Most of the time, I'm on form. I would like to think I caught it right 80% of the time, but that might not be the case. If you're following me, that might not be the case. But yeah, we can definitely see a lot of bullish signals here, and the market is overextended. Are we overextended to the downside? Absolutely. Look at this. This is ridiculous. We do need a bit of a bounce back. We need to see a bit of that come back. So again, we see it here. Are we overextended? Absolutely. So it would be great to have a bit of a turnaround. Often what happens in cases like this, last thing before I wrap up, often what happens is you get this, comes down, produces a double bottom. I was talking a lot about double bottoms today. I like double bottoms and I cannot lie. Anyway, and then you see a change in trend. And then you'll get your bullish divergence. That'll go up like that, that'll go up like that. And then you'll get your change in trend. And that could take several weeks. Do I think it'll still go low, the market, or will it have some room to breathe? Basically, to quickly sum up for you, Diana, because I'm going to wrap up now, every single chart is producing what could now be a very strong weekly candle, very strong bullish candle. So my thoughts are, especially if we close strong for the rest of the week, my thoughts are we're going to see next week, we're going to see the markets follow through on that. But we're still within a downtrend, but I think we'll work our way back up to these other levels. That's what I think will happen most likely between now and next week if these keep pushing higher. Okay, so you've got my, oh, you see it's potentially starting here. Let's take a bit of a breather, come now. So just for those of you who don't have it, I'm going to give you my email address. And if you just remind me, I will send you a copy of the recording so you can watch it from the start down. I think it's worth your while. I think today's one is worth your while. Precision, there we go. Trade with precision. Just send it to me in the morning or something, just saying, can I get a copy of the recording? And I'll just reply and send you a link for it. Here we go. So, ladies and gents, as usual, yeah, you too as well, Leon. Thank you so much. As usual, guys, please have a fantastic week and weekends trading cautiously. I think there's some good opportunities. And I think tomorrow, hopefully, we're starting to see a bit of a weaker dollar so that we might be seeing a bit of a change in trade. But I'm going to approach it cautiously because it's early days. Okay, everyone else who's new, especially if this is your first webinar with me, I hope that you found it instructive. I hope you found it useful. Interesting, because the answer to the question, should we get an umbrella, is probably not yet. We might be getting a bit of light sun coming through those clouds. We'll see, even as we head into winter. Otherwise, it was an absolute pleasure. I always enjoy my webinars with you guys. Thank you very much. And I will see you in the next ones. Thank you. Absolute pleasure.